So in this video, we'll be showing you clips from 5 different videos from our pre-scene analysis pack. And the first clip is from the pre-scene analysis series. It's vital that you fully analyze your pre-scene, and this requires a detailed examination of the case study, ensuring that every section is fully understood. So our pre-scene analysis video provides a page-by-page analysis of every section of the pre-scene, and it ensures you don't miss anything important, and it helps you to build a comprehensive understanding of the material. And this is vital if you're going to gain high marks in the exam. So in this clip, we've taken a section from our pre-scene analysis video series.
Right, well, that's your role. So that doesn't really change from exam to exam, except that in this case, you're in the finance department of SumTrix as opposed to another pre-scene company. What does change from exam to exam is the company in question. So what we're going to do is we are now going to scroll down and have a look at a bit of an introduction to this company. And we know the company already by this point is called SumTrix. And we know that it's a company that manufactures and sells freestyle and touring skis. Now, right at the outset, it's worth picking up on the fact that this company only sells particular kinds of skis. And as we'll see as we go throughout the pre-scene, we'll realize that there are companies that are much, much bigger that produce a whole range of kinds of skis. But here, right from the start, we get a sense of SumTrix's core strategy. That's a bit of a mouthful. SumTrix's core strategy. What they're not trying to do is to compete with the mass market for all-round skis. So if you're going on the ski holiday and you go to a ski hire shop, you're probably not hiring the kinds of skis that SumTrix are making, unless you happen to be into freestyle or touring skiing. What SumTrix are they are specialists. It's a specialist company. They work in the niche of freestyle and touring skis. And so as we'll see as we look through the pre-scene, they've been able to build a reputation because of this specialism. But it's specialist. It's a specialist company rather than a mass market one. And that's going to be an important thing to bear in mind as you're thinking about this particular company. The way they make their profit, the way they make their margins is not by trying to produce the maximum number of different kinds of skis as possible. They're not diversifying particularly, they are specializing. Now we know the company also sells ski accessories. That's going to be something that we pick up on a little bit later in the pre-scene. They're based in Reeland. It's not a real country. The OCS never deals with real countries. However, it is a country that is based in Northern Europe. Now, that's going to be important when it comes to looking at the industry, the ski industry, bearing in mind where the company is based. And they've got the R dollar as its currency. Don't try and compare this to the real to the US dollar or to the pound. You need to think through the currency as the pre-scene presents it. So when you're looking at financial figures, don't assume that one R dollar is broadly equivalent to a US dollar. That's not the way it's going to work. You need to take into account the figures that are given in the pre-scene in order to be able to compare it to. So that's just one thing to say. And another thing we can notice here is that Reeland has got a strong ski culture. Now, why is that important? Well, it's important because we've got an authentic brand origin. So it's basically, Reeland is a country that has this strong ski culture. And so to be based in Reeland can be a key part of the brand identity of SumTrix, especially when we're talking about a European market. As we'll see when we look through the pre-scene, the European ski market is pretty strong, pretty lucrative. And so to be based in a country that has got a strong ski culture is automatically going to give you a good brand strength compared to other countries. Imagine you were setting up a surfing company in the middle of a landlocked country. You're much less likely to have that authentic sense of brand because people are going to be thinking, where do you go surfing? Same thing is true with skiing. If you've got a ski company that's based in a country that has no mountains, you're going to start questioning the authenticity of that brand. And so it's going to be an authentic brand origin as a result. Now, moving on. So SumTrix was founded 10 years ago. So it's not a particularly old company. It's quite a small, not a small company necessarily, but it's quite a young company. And it was founded by three friends that met through their love of freestyle skiing. So there is a passion that is involved here. So Eleanor, Felix and Julian met because they loved skiing so much. Now, that builds on the point that we made about the authentic brand origin. So SumTrix isn't just a corporation trying to make money. That's not the way it started. It was actually founded by people who really loved a specific kind of skiing. And so that tells us that the decisions that they're making are going to probably be driven by a passion for the sport and not just profit margins. And you know what? That can be quite a powerful marketing tool. It can really help them to connect with a core customer base. If you're really into skiing and you're buying from a company that you know that the founders love skiing, they're not just out to make a profit, that's going to give a real sense of trust. So that's going to be a good marketing tool as a result. So Felix and Julian met at university. They studied engineering. And they also competed in freestyle skiing competitions at an amateur level. And they met Eleanor at one of those competitions, and she was a professional freestyle rider. Now, these are important details because it tells us that the founders of the company had that basically a perfect blend of skills for the job that was required. So they've got the technical know-how because they studied engineering. So Felix and Julian are able to bring that engineering knowledge as to the making of skis, but they can also combine that with their high-level ski experience. So particularly, you bring in Eleanor as a professional rider, professional freestyle skier. She's going to be able to bring some insight into the elite side of things. And so that gives a real sense of trust, a real sense of credibility. You could even call it maybe their secret sauce, the fact that actually they are they have that perfect blend of skills, the love for ski, the high level ski, but also that engineering skill, that engineering knowledge. So in 2015, so 10 years ago when the company started, they decided to combine their engineering expertise and their love for freestyle skiing, which is what we've just commented on, and they created their own freestyle ski brand. Their goal, we're told, is to create high quality skis that would elevate performance and improve the experience for freestyle enthusiasts. So that goal really, that gives us a sense of their position in the market. Now, they're wanting to create high quality skis that will elevate performance. In other words, this isn't a mass producing, mass marketing company that is trying to create cheap and cheerful skis. That's really not their goal. And you can kind of understand that. They come from a high level skiing background. So when they combine, they're probably going to be wanting to create high quality skis, really high performance skis. So that means that they're not trying to create the cheapest skis. And so right from the start, their strategy seems to have been to go for a premium brand. And that probably allows them to justify a bit of a higher price point than if they were going for more of a cheap and cheerful kind of ski company. Now, in the exam, that might be something that comes in, particularly when it comes to pricing decisions. And thinking through how you go about pricing a particular product, and that particular strategy of trying to create very high quality skis, that's going to have an influence on how you make those pricing decisions. You can probably justify having a higher price point because of the quality. Now, they decide to call the company SumTrix, and the reason it's called SumTrix is it basically combines sum from summit and tricks, and you spell it in a cool way. And the idea is that the brand name itself gives you that sense of adventure and playfulness whilst keeping the connection to the mountain. Now, you might think it's a little bit of a cheesy name, and to a certain extent maybe it is, but it is a clever bit of marketing that's going on. So you've not just got a generic name. What they're doing is they're basically aiming at their target audience. So you've got the idea of the summit, you've got the idea of the tricks, and so on. And so it basically gives you quite a memorable name. And it basically encapsulates, it captures what this particular sport that they're producing skis for are about. And so with that, I don't know, somewhat cheesy name perhaps, they're creating a strong sense of brand identity. They're reinforcing the niche, the specialist product that they are creating with that particular company name. Because you think SumTrix might not be the best company name for an all-round ski company, but actually when they are producing freestyle and touring skis, well, at the time, as we'll find out, they were only really producing freestyle skis, it makes a lot of sense. And so that reinforces the specialist nature of this company. So moving on, they started off in a small workshop in the mountain town of Gorner-Greyton. So again, that emphasizes this idea of authenticity. They're starting somewhere where skiing really is already a big thing, and they started making their first prototypes. Now, right from the outset, we're told that they wanted to craft skis with flexibility and durability that would basically be able to cope with the demands, the stress that you put on skis in freestyle skiing, offering excellent control and smooth landings on jumps, rails, and other terrain park features. So again, just to re-emphasize here, we are really talking about a specialist area. So that the technical features on their skis, that emphasizes the fact they're really going for a specialist kind of ski. It's not just we're making a good ski. They're really all about the needs of a freestyle rider, as it's called, a freestyle skier. And so you got those words like flexibility, durability, gives us a sense they're really, really catering to this specific sport. Also means they've got a really strong technical understanding of what the customer needs, because they themselves are freestyle skiers. So they really understand what it is that makes a good freestyle ski. Another feature right from the outset of this company is a unique look and design for the skis. And as we'll see throughout the pre-scene, that's going to become a major feature of their brand. This unique designs. That, in fact, one of the founders, Julian, in this case, was kind of the guy who kick-started that. It's a big part of their brand. They've got their unique, colourful designs, and that's a real core feature. That's something that people liked. We find that they liked the trendy designs right from the outset, and that basically gives them a unique selling point. So if you're thinking about your E1 syllabus, the marketing side of things, product differentiation here is a key. There's something that sets apart their product. Why buy this product rather than another one? Well, one of the unique selling points, one of the things that differentiates this product from SumTrix is that unique design side of things. So that's something that is potentially worth bearing in mind in your exam, is that uniqueness of their products, the product differentiation. And both that craftsmanship, both that strong sense of technical excellence in their product and the design, so both of those, they got pretty quickly, they got a loyal following among local freestyle riders. And so right from the outset, there's a really, really strong reputation. They've got a loyal following. It's not just customers, they've got a loyal following. So people who really don't just buy their products, but have a real sense of attachment to this particular brand. And that's going to be really valuable for a company, because they can leverage that trust, they can leverage the loyal following, and that's going to help them as they grow, because you get that word of mouth marketing. Basically, they don't have to actually pay as much money on the marketing front as they might need to, because they've got those loyal customers. You can imagine if some of them are professionals, they're going to be really promoting that at the highest of levels. And so that's going to help them as they look to grow. Now, just in terms of thinking about the exam side of stuff, if you've got a really, really strong brand image, even right from the start, and you're really leveraging that, that can sometimes come with a higher reputational risk. Because if you are a brand that is known for very high quality, always delivering, the risk when you don't deliver is much higher. So you could imagine an exam scenario where, again, drawing on your P1 syllabus, risk and uncertainty, where maybe you need to talk about how to manage a potential reputational risk. Maybe there's a new product and the initial feedback's not that great, and you need to think, how do we deal with the reputational risk? How can we mitigate that reputational risk? But right from the outset, they've got a really, really strong following, a strong brand right from the start.
Next up, we've got a clip from our strategic analysis. It's extremely important that you have the ability to identify how the pre-seen relates to key models and theory, and the examiners will expect students to demonstrate a good understanding of the models and theories and make the appropriate links to the case study during the exam. It can be hard to fully analyze a company using models you've only recently learned and be confident that you've got it right. So our strategic analysis has done that hard work for you. So in this clip, we're going to take a look at our strategic analysis video.
So let's start with the future. Where is the organization heading? And in order to start with doing that, we're going to start at the highest possible level. We're going to think through the mission. Now, the mission of a company can be broken down into a number of parts. First of those is the purpose, which is basically asking the question, why does this company exist? Who does it exist through? And what does the company want to achieve in the long term? Now, another element of mission is strategy. And at this point, we're thinking about how does the company end up being competitive, and also what is the what range of businesses is it operating within? So who's the competition? What are the other companies, the other range of companies that would count as competitors? Within mission, we've also got values. This is really what the company stands for. For example, you could have quality, value for money, innovation, and so on. And then policies, which is making sure that people end up acting according to the purpose, strategy, and values. So what are some written down, set in stone policies that the company has to make sure that everyone in the company acts in accordance with that purpose, the strategies, and the values? So let's think about it for SumTrix. Let's think about the purpose of SumTrix. Now, based on the pre-seen, I would say that SumTrix exists to craft high-performance freestyle and touring skis. That's kind of their big purpose. That's what they give themselves to. They're wanting to go for high performance, and they're specializing in freestyle and touring skis. Now, who do they want to serve? That's part of the purpose. Well, they're really wanting to serve enthusiasts of freestyle and touring skiing. That's relatively self-evident. And another thing that they want, what they want to achieve long term, is to inspire. So this is a quote from the pre-seen: inspire riders and skiers to push boundaries. So that gives us a little bit of a sense of what the purpose of SumTrix is based on the information in the pre-seen. Now, bearing that purpose in mind and bearing other details that we've looked at in the pre-seen, what's the strategy? Well, the strategy in terms of how to compete is to be a specialist in a highly concentrated market. Now, if you remember, the European market is basically dominated by 5 major brands. They make up 75% of the total market share from what I can remember from the pre-seen. And so the strategy of SumTrix is to be a specialist rather than a generalist. And so what they're going to do is they are going to differentiate by having better quality skis generally speaking, better quality skis, lighter skis and so on than the competition. And they also differentiate through unique artistic designs. Those are two key selling points that we see from the pre-scene. So they're not trying to be the generalist. They're not trying to give you skis that are kind of bog standard, the kind of thing you're going to get really cheap. They're going to be specialists in freestyle and touring skis. They're going to differentiate by making sure they make the highest quality skis, freestyle and touring skis in the market, and that they've got those unique artistic designs. Now, what are some values for SumTrix? Well, I think we could say there's a commitment to quality, we've seen that, but also sustainability. That's a really big part of what they have put as their mission statement really on the website, to go for sustainability. And I think looking at the pre-scene as a whole, we can see that they've got a commitment to innovation as well. They're constantly looking to upgrade their ranges. They spend a lot of money in research and development. So there's a commitment to quality, sustainability, and innovation. One of the values is to put the user's experience first. That's really the emphasis. They're crafting, they are ski enthusiasts. That's how they started. They're wanting to put the user's experience first. They wouldn't just be happy with profits. They really want to make sure that what they're doing is helping the users have a great experience. And I think there's a phrase like connect with the mountain in the pre-scene. And they're environmentally conscious. I suppose that links with sustainability, but that's going to be one of the key values. They care about the environment in which their customers are going to ski. And what are some policies? Well, policies sometimes need to be a little bit inferred from the pre-scene, but there are some that we can kind of see emerging. So the policies end up being obviously aligned with those values. Quality checks, you notice when we went through the manufacturing process, lots of quality checks. Sustainable sourcing, we can assume that there is an actual policy about that, and sustainable production. And there's active retailer management. So they provide training for their retailers. They check that their retailers are doing a good job. And so we can assume that these are policies within the company. They're written down somewhere. So that's the mission. Bearing that mission in mind, what are some objectives and how could we measure the performance of the company against those objectives? So what are objectives? Objectives are a focused target that you can move towards. So there's a clarity about an objective. Why are objectives helpful? Well, one of the things that they do is they motivate staff, because staff know what they're actually focused on, and they help a company to actually measure how well they're doing. Because if you've just got a vague mission, how do you measure how well you're doing against a 10, 20-year vision? Whereas if you're a bit more specific and you've got clear objectives, much easier to come up with KPIs that will help you to measure your performance. So what are some objectives that we could infer from the pre-scene? So they're not always spelt out, although sometimes they are. What are some inferred objectives that SumTrix has according to the pre-scene? Well, we know that, this isn't so much inferred, this is actually stated explicitly in the pre-scene. SumTrix wants to increase its share in the touring ski market. So that's a very clear objective that they hold. Another key objective is to expand geographically into North America. That is stated in the pre-scene. So can you notice these are objectives that are a bit more specific? We're increasing share in a specific market. We're expanding into a specific place rather than the general mission of wanting to make really good skis. Improve sustainability, I think, would be another key objective. So they've got a commitment to sustainability. You look at the pre-scene and you think clearly one of their objectives is to be as sustainable as they can. And then continually innovate. That's pretty clear from the amount of research and development they put into their new products, the number of times that they update the products. They want to continually innovate. So there's an objective of being a company that continually innovates. So how could we measure this performance? So what are some KPIs? Now, KPIs are a very common topic in the OCS, and so it's helpful to think through what kind of KPIs can measure these kind of things. Well, what are some key performance indicators for increasing the share in the touring ski market? Well, they would be things like market share and revenue growth. They would be KPIs that help you to track how well you're doing in terms of the share in the touring ski market. Geographic expansion, what are some KPIs you could use? Well, they would be new market penetration metrics. So we're talking about things like revenue and website traffic from North America, for example. Like what's the website traffic like? What's the number of visits per day and so on? What's the revenue? revenue specifically from North America. So those would be some new market penetration metrics. Sustainability metrics, obviously, when it comes to sustainability. So things like percentage of raw materials that are sustainable, what's our production waste, what's our carbon footprint. And then for innovation, you're thinking about innovation metrics. So we're thinking about things like research and development spending, percentage of revenue from new products. So those kind of KPIs will be helpful. So there are some objectives and how we would measure that performance. Now, bearing all of that in mind, let's now talk about some critical success factors. So we've set some key objectives. Critical success factors are basically things that an organization need to do well in order to succeed. So if they want to accomplish their mission, if they want to hit their objectives, they need to do well in these particular areas. So it's absolutely central that for each case study organization, so in this case SumTrix, that each critical success factor ends up being developed and ends up being improved so that it becomes a strength in the business. Because if these CSFs, these key critical success factors, are strengths in the business, that means they're going to be doing well. So if you've got new strategies in the exam that support these particular critical success factors, then it's a strategy that you should probably support, as long as it's obviously realistic in other ways, like being affordable. However, if you see a strategy that's suggested in the OCS exam that contradicts these critical success factors, then you should probably question whether it's a good idea. So, what are some critical success factors for SumTrix? Well, I would suggest that, there's a number. You generally want to stick between 4 or 6. I've listed 6, so let's go through them. So based on the pre-scene and everything we've looked at so far, I would suggest innovation and performance leadership is going to be a critical success factor, because in order to compete, they need to be the best. So they've got a niche market. They're not trying to be the generalists like the big companies. So in order to compete, they need to be the best in their niche. They're going to need to innovate. They're going to need to have high level performance. They're going to need skis that are, quote from the pre-scene, lighter than competitor brands. Because if they don't have that, they can't justify the premium price that they have, because they need to be a leader in the specific niche of freestyle and touring. So innovation and performance leadership is a critical success factor. A second critical success factor is going to be strong brand management. They have a very loyal following. It's a company that has built a reputation for excellence, built a strong following. And that's obviously really foundational, that underpins its success. But they need to continue to maintain that. So they need to manage the strength of their brand. They need to communicate their core values of quality, of craftsmanship, of sustainability. So they need to maintain their brand image. Sales channel management is going to be another critical success factor, I would suggest. There are 2 sales channels. Over 60% of revenue comes from retailers, and then just under 40% comes from the website. So that means that they are going to need to manage those sales channels well. They need to manage their relationships with their retail partners, because if they don't, and if they put all of their effort into the website, then the main source of revenue is going to be like, they're likely to be not as happy. They might not want to stock as many skis and so on. But at the same time, if you ignore the website, then your highest margin sales channel ends up going down the drain. So you need effective sales channel management. That's going to be a critical success factor. Another CSF, another critical success factor is going to be efficient, scalable production. So SumTrix is growing and it's wanting to expand. And so in order to do that, it's going to need to somehow figure out a way of making sure that the, quote, largely handmade production process can end up scaling up. So if it wants to expand into North America, it's going to need to produce more. And so it needs to make sure that it's able to actually scale up production to the right level, whilst obviously maintaining the quality. So that's going to be a real critical success factor. Can they scale up production to meet the potential demand from North American expansion? Another critical success factor is robust supply chain management. If you look at the pre-scene, it's impressive just how many different materials from different places go into making a single pair of skis. Wood from China and North America, for example, local or European suppliers for various other components and various other materials. If there's some problems in the supply chain, that's going to lead to delays, it could lead to increased costs and so on. So there needs to be really good management of that supply chain, making sure you're getting the best prices possible whilst remaining sustainable, making sure deliveries are on time, making sure you've got potential backup suppliers. If suddenly there's a global crisis and they can't import their bamboo from China or their maple from North America, what do? You need robust supply chain management to make sure that production can continue. That's a critical success factor for SumTrix. And then finally, and I think this is an interesting one, is seasonal cash flow management. SumTrix only really has high sales during just before and during the early ski season. So it's seasonal sales, but they produce all year round. And so that's going to lead to cash flow challenges. So it's really important to make sure that the company is able to manage its cash effectively, particularly in the down seasons where they're producing lots and therefore paying lots of money to suppliers, but not selling much. They need to make sure they manage their cash flow so they're not having to do things like overly rely on debt, which would obviously increase their gearing, make it more difficult to invest in the future and so on. So seasonal cash flow management is going to be really important for a company like SumTrix.
We're casting the net a little bit wider now with a look at the wider industry in which the pre-scene company operates with our industry analysis video. It is critical to demonstrate to the examiner that you have fully understood the pre-scene industry as a key element to gaining extra high marks in your case study exam. Researching the industry can be a laborious process, especially when you're not sure which information is useful and which isn't. And our team has spent hours doing this research for you, finding the information that will help you to achieve a wider perspective of the industry and build a deeper knowledge in preparation for your exam. So in this next clip, we'll be taking a look at our industry analysis video.
Now, the ski industry serves a broad and diverse customer base, ranging from professional athletes to first-time recreational skiers. Understanding these different segments and their evolving demands is critical for a manufacturer to succeed. In this analysis, we've broken down the market into different segments such as age and gender, with its rapid growth in the women's and youth segments, despite the male skiing segment still leading the market. As we've mentioned, the different skill level and sport type, with alpine skiing being the largest segment. However, niche sports like freestyle and ski touring are experiencing significant growth. However, it's gaining popularity in new regions like Asia Pacific, South America, and the Middle East, driven by increasing disposable incomes and adventure tourism. Now, what customers want is always changing, and the ski industry is constantly adapting to meet these new demands. And one of the big ones here is customization and personalization, with a growing demand for custom fit and personalized equipment, with skiers willing to pay a premium price for gear tailored to their specific needs. We're also seeing a growing demand for safety and technology. As consumers become more aware of safety, the demand for protective gear like helmets and goggles is on the rise. Additionally, tech-savvy consumers are driving the adoption of smart ski equipment such as GPS trackers, performance sensors, and real-time data analysis. And another big one, which will pop up a lot in this analysis, is sustainability, with growing environmental concerns really influencing buying decisions. We're seeing more and more skiers, especially younger generations, looking for more eco-friendly gear, and again, they're often willing to pay a bit more for it. And finally, there's constant tension around value and affordability, where despite the rising cost of equipment, a significant portion of the ski market remains price sensitive. The high cost of quality ski gear can be a barrier for new participants, leading to a demand for more affordable or even rental options. So SumTrix's focus on freestyle and touring skis places them in a high growth niche market. They also understand the trend towards personalization, which is why they have a custom ski range. And finally, their commitment to sustainable materials and using social media influencers shows why they are perfectly aligned with what modern consumers want. And this is all key to their competitive advantage. However, you should be ready to think about questions like, should SumTrix try to expand beyond its niche to reach a broader, more price-sensitive market, for example? And in the next section, we'll go into how ski manufacturing companies actually connect with their customers through marketing strategies. Effective marketing in the ski industry requires a blend of traditional and digital strategies to reach a diverse and global audience. The focus is on building a strong brand identity that resonates with consumers' passions for adventure, performance, and the outdoors. And in terms of the channels and strategies, digital marketing nowadays, as with many industries, is a huge part of this. We're talking about social media platforms such as Instagram and TikTok, as well as using influencer marketing, partnering with ski-fluencers to build trust and credibility with their followers, creating a sense of authenticity in your brand. And of course, a strong e-commerce platform is essential to back up this marketing strategy. However, traditional marketing still plays a role, especially in achieving broad brand awareness and for targeting older demographics. And to really understand the industry's marketing strategy, we can break it down using the 4 P's of marketing model. In this market, brands must offer products that are high quality, innovative, and differentiated. And linked to this, they're often considered a luxury product, which often means that there's premium pricing. However, there's an increasing number of brands coming in at lower price points to really try and cater to a wider audience. In terms of sales channels, the primary channels are specialized retailers, outdoor gear stores, and increasingly companies' own websites. And lastly, promotion in this industry is often about building a compelling brand story and building a sense of community and authenticity along with your skiers. Now, in this analysis, we thought it'd be useful to chuck in some case studies of successful marketing strategies in the ski manufacturing industry, such as Solomon's community-driven approach using user-generated content and Atomic's integration of sustainability into its core brand identity. However, we've also put in some examples of some marketing failures, such as Knee Binding's marketing mismatch with its target demographic with one of its products. So these case studies are really useful to apply to SumTrix to think, how can it best strategize its marketing methods? And by applying the 4 P's analysis to SumTrix, you can get a good idea of its current marketing position. Its product focus on high quality, specialized skis, distinguished by their lightweight design and unique artwork, means that they can adopt a premium pricing strategy. And of course, this product quality only backs up its promotion methods, which is reliant on its good reputation, unique designs, and its use of social media influencers.
The next clip is taken from one of our most popular videos, the Top 10 Issues. The Top 10 Issues video identifies the 10 most likely issues to appear in the exam based on our expertise and experience in this area. And our expert gives guidance on how to deal with the issues in your answers, provides advice on which models to use, and key points that you should raise. Based on our experience of analysing CIMA case studies for over 10 years, our predictions have been extremely accurate in previous exams, with around 70 to 80% of topics in the real exams being covered in our top 10 lists. So take a look now at this clip from our top 10 issues video.
So with no further ado, let's start with issue number 10. We're counting down from 10 all the way down to 1. So issue number 10, and the issue number 10 that we think is going to come up in this particular iteration of the OCS is financial reporting. Now, why do we think that financial reporting is going to come up? Well, there are just some issues that always come up in some form or another in the OCS. Financial reporting is a key part of your F1 syllabus. It is always examined in some way. And if we're thinking specifically about the pre-scene, I don't know if you noticed in the statement of cash flows, or at least you will have if you've been watching the analysis videos we've produced, there has recently been a large investment in PPE. And so that gives us a bit of a clue that there might be some PPE related financial reporting. So there's the basis of choice. We basically can guarantee that in some way or another, financial reporting is going to come up. What are some specific issues that can come up within financial reporting? Well, here are some possible ones that we are listing for you. It could be that there is some purchasing of assets or disposal of assets. So you're going to be drawing on your knowledge of, for example, capitalizing the cost of assets or calculating profit or loss on the disposal of assets. This is an industry where there are lots of machines that are used, so that's going to be quite a likely thing. Machinery upgrades, maybe there are some replacements of machines that are going to come up. That's going to be something that then needs to be dealt with in terms of how it impacts the financial statement. Inventory is a big deal in this particular industry. SumTrix holds a lot of inventory, and so inventory valuation or maybe writing down of inventory could be something that comes up. The impact of tax on financial statements, that seems to be quite a likely issue that could come up. And we've added this one in because leasing assets, we've noticed that there are no right of use assets in the statement of financial position, or no lease liabilities as well. And we know that SumTrix is planning on expansion, and so there could well be a question related to, do we buy or do we lease? At which point you're going to be dealing with leases. So that could be some likely issues that could come up. Now, what are some key points to raise when it comes to financial reporting? Well, you need to know the general stuff. You need to know the correct standards, the IAS, IFRSs. You need to make sure that you understand the impact of different decisions on the actual financial statements, statement of profit or loss, statement of financial position. It's mainly going to be those two. But also statement of cash flows, and make sure that you're clear on your debit and credits. So you could use the acronym DED-CLIC if you find that helpful. So debits are going to increase expenses, assets, and drawings, and then credits are going to increase liabilities, income, and then capital or equity, really. So make sure you get your debits and your credits right. And then some relevant theory. Let's run through this quickly. You need to know your key IFRSs and IASs. So IAS 16 for any PPE related stuff, IFRS 5 for any disposals, IAS 2 for inventory. Make sure you're clear on things like capital allowances on assets for tax. You get the information of the actual percentages for capital allowances at the end of the pre-scene. Make sure you're clear on how that works. IAS 10, events after the reporting period, is often examined. Make sure you know that. And if there's a question related to leases, IFRS 16 is going to be your go-to. So that's issue number 10. Let's now move on to issue number 9. And we have listed here variance analysis. Now, why are we suggesting that variance analysis is going to come up? Well, similar to financial reporting, it's frequently examined. You can guarantee that there is at least one of the variations of the OCS that is going to examine variance analysis. It's also a really important P1 topic. And the pre-scene comes with budget information, and there's even a cost card in the pre-scene, which gives us a bit of a clue that variance analysis is going to be a very likely topic to come up, a very likely issue to come up. Now, within variance analysis, what kind of things are likely to crop up? Well, the thing with variance analysis is, to a certain extent, you can end up meeting very similar issues from one OCS to the other, just with some small changes depending on the specifics of the pre-scene company. So you're likely going to face things like analyzing the sales volume and price variances to figure out the impact that that has on revenue. investigating direct material and labor variances. Remember, labor heavy industry, and overheads are absorbed in labor hours, which means labor variances is quite a likely variance to appear, and how that affects the cost of sales. Identifying the causes of variances is going to be a likely way that this is examined. So not just explaining what does a variance mean, but what's underlying it. Is it underperformance? Could it be market conditions? Could it be inefficiencies when it comes to production, and so on and so on? So those are likely issues to come up within variance analysis. What are some key points to raise that are related to variance analysis, though? So let's have a look at some of them. You could make the point that sales variances could be linked to lower sales volume, or it could be pricing pressures in the market. So that's a general thing you need to know, but those are some points that you might want to raise. Cost variances. Those could be due to either higher material costs or maybe labor inefficiencies. It's possibly linked to supply chain issues. Fixed overhead variances. Now, operational inefficiencies could end up contributing to unfavorable variances. So there are some key points amongst others to raise. What about some relevant theory? Well, you need to know how to calculate your variances, because you're very often going to have to explain what a particular variance means. And so you need to know how to calculate it. So material price and usage variance, labor rate efficiency variance, fixed overhead expenditure, volume, capacity and efficiency variances, sales price and volume variances, and so on and so on. Know your variances, know how to calculate them, and know how that ends up relating to forecasting as well. So basically, make sure you know your variance analysis theory.
Our final clip is from our mini mock debrief video. We produce a range of mock exams for each sitting, and alongside each of those mocks is a video debrief. And in these debrief videos, our experienced tutor analyzes every question and takes you through a step-by-step guide on the best way to approach them. And by watching debrief videos, you'll learn to understand how to pick out all of the key information in the task and the requirements. You'll use that information to build an effective plan. Many students fail due to poor answer planning. And then that will help you to formulate an excellent answer. So in our sample video, the tutor will take you through question 1 of the mini mock.
We are going to scroll straight past all of this information, and we're going to go straight to these things in bold here. Basically, the mark allocation percentages. What these tell us is basically how much of the 25 available marks, so we've got 25 available marks for each of the tasks, and each task is 45 minutes. And so these percentage allocations I've just highlighted will tell us what percentage of those 25 marks are allocated to each particular subtask. And so what we are going to do is we are going to run through each of these subtasks and break down how many marks and how much time we could spend on each one. That's a key part of time management, is preparing and planning how much time you can spend on each of these subtasks. And so for subtask A, the great thing when you've got 25 marks is, in order to figure out how many marks you have, you basically take the percentage, 32 here, and you divide it by 4. And so that gives us 8 marks. And in terms of time, we're looking at 32% of 45. That gives us around about 14 minutes to do that particular subtask. Now for subtask B, we are looking at 9 marks. So let's see if I can actually get it to right. 9 marks going on here. And then we have got 16 minutes available of time to give to that. And then for subtask C, we are looking at 8 marks. 8 marks and 14 to 15 minutes. Let's put 15 minutes because that then means that we're adding it all up to 45 minutes. So that's the first step that we take. The next step is we again ignore all of the material at the top and we go straight to subtask A, which is introduced by this, please write a report that covers the following. And what we're going to do at this stage is we are going to very carefully read the subtask, and we're looking for clues in the way that the subtask is phrased that is going to help us already get a little bit of a general structure to what our answer could be. So we are being asked to assess, which basically means we are going to need to explain and provide a judgment of some kind. So explanation and judgment. And we're going to need to assess the advantages and the disadvantages of adopting a participative approach to budgeting at SumTrix and explain whether or not it would be suitable for our company. So what am I thinking here? Well, at this stage, the great thing is we've got lots of ands. Ands are helpful. If you get the word and in a subtask, it helps you to figure out particular key elements of the subtask and therefore particular key elements of your answer. So we've got, we need to assess, number one, the advantages, number two, the disadvantages of a participative approach to budgeting. And if you remember from, that would be from your P1 syllabus, when it comes to participative approaches to budgeting, that is going to be an approach to budgeting that involves the managers at the operational level rather than a top-down approach where basically the directors or the finance director usually just sets the budget and imposes it. So we've got advantages and disadvantages of that. Now, you might already at this stage be able to start thinking of some advantages and disadvantages of participative budgeting, because you will know those generic advantages and disadvantages from your studies, and so you're going to look to apply them to SumTrix. But very often those generic advantages and disadvantages are relevant. So you might think, when it comes to advantages, you might think about things like accuracy, because the managers are more involved. You might think about, so obviously if managers are more involved at those operational levels, they know what they're talking about a little bit more, so they can have a greater awareness of the actual costs that are involved. You could talk about ownership. If operational managers are involved, they're going to get a higher sense of ownership and motivation. You could talk about communication, because if loads of different managers and departments are involved in setting the budget, they're going to need to communicate with each other. So you could already think of those before you've even started reading anything else. And then when it comes to disadvantages, you could already start thinking about the amount of time that it takes to do a participative budgeting approach. You could, for example, think of some behavioural sides of participative budgeting. The fact that sometimes it could potentially encourage managers to set budgets that are a bit too easy for them to meet so that it looks like they're meeting it. And then the potential of conflict between different departments, because it could be that one department feels they should have more in the budget and another department says, no, we need more, and not everyone can have as much as they want. Now, we're spending a little bit longer on this first subtask doing this planning. We won't spend this long on every single one, but I'm basically demonstrating what I'm doing when I'm approaching this. And so I've not yet read any more of the information, but I've already got a sense of some of the things that I might want to be saying in my answer. And then we've got advantages, disadvantages, and then we need to explain, that's the third part, whether or not it would be suitable for our company. And now that's something that perhaps is slightly harder to do until we've seen some more of the information. So we've already got an initial structure, an initial possible outline for our answer. The fact that we're doing that really carefully at this stage, carefully reading the subtask, means that if we do that initial planning, we're much less likely to forget to answer certain parts of the question, certain parts of the subtask. So what we're now going to do is we basically scroll up and have a look at this information. So we come into work, we get an email from our manager. It's always our immediate manager who emails us, and we are told the subject line basically gives you a bit of a preview as to what the topics in this task are going to be. We find out from reading this paragraph that our manager is seeing some significant discrepancies between our actual and budgeted figures in last year's performance, and we've got some reference material. We're going to need to have a look at that. We are reminded, but you will know this from the pre-scene, that SumTrix prepares budgets on an incremental basis with little involvement from operational managers. And that's no longer going to be that effective given our growth and the market volatility. And so what our manager is now doing is wanting to assess whether our current budgeting approach is the best option going forward. So that gives us a bit of an intro to what the subtask is really about. And now we need to have a look at some of the reference material that we are told about. So let's have a look at that. Oh dear, I've scrolled a bit too far. And so these are our actual versus budgeted figures for the year ended in 2025. And so as you can see, what we've got is our budgeted and our actual. So what can we tell from here? Well, what we can tell is that our sales revenue was lower than expected. And we can also tell that our cost of sales was higher than expected. And so maybe what we've got is some cost management issues going on. And that obviously means that when it comes to the gross profit, we've actually got a significant shortfall compared to what we were actually expecting. Now, these notes basically tell us what we already knew from the pre-scene. Tells us that the budgets are prepared on an incremental basis, that there's limited involvement from the managers in the budget setting, even though there's quite a few new operational managers, and that Maria Thompson, the head of finance, sets all of the budgets for the different departments. And so what we're going to do is, if we're talking about this issue of cost management, that's potentially going to be something that we could bring into our answer when we're thinking about the suitability of participative budgeting. It could be that actually managing the costs would be really, really helpful. And so actually we could provide this particular information to help us in our answer. Anyway, I feel like I've been highlighting enough issues and talking enough. What we're now going to do is we're going to head over to have a think about how do we combine all of that stuff we've been looking at into our structure and into an answer. So let's head over and do that. Okay, so here is where we're going to be preparing our outlines to show you. So let's jump straight into task 1. Now we've got our 3 subtasks with the timing and the marks allocated to them. Let's have a look at how we're then going to organize our answer for subtask A. Now, we got 14 minutes in total, but how long do you think we should spend on planning? Well, I'm going to suggest we spend probably 2.5 minutes doing the planning stage. That's maybe 15 to 20% of the time. That's probably a good percentage of time to spend. Obviously, I spent a lot longer than that because I was explaining as I went, but you want to be doing that process I've just been through relatively quickly. And then that therefore leaves us with 11.5 minutes to actually write. So you want to be coming up with a plan within those 2.5, 3 minutes at the start. And so what we're going to do is, I think it makes sense to have a short introduction to just explain what participative budgeting is. So the fact that employees in different departments and at different levels are involved in preparing the budgets. If you remember, we then got a 3-part structure. So we're going to first of all talk about the advantages. We're going to talk about the fact that participative budgeting improves accuracy. So if you've got the operational managers who are involved in the production department helping to set the budgets, they're going to have a better idea of the specific costs that are involved, the specific pressure points. And so it's probably going to improve your accuracy. Increased ownership and motivation is another one that we've spoken of. We could refer to the fact that there are 3 new operational managers that have been brought in. That's going to help to increase their ownership as in the company, increase their motivation because they're much more involved in those slightly more high-level decisions. And then better cross-departmental communication. So you've got the different departments, perhaps the marketing department and then the production department, and even within departments at different levels, because so many people are involved in creating a budget, they need to communicate better, which is going to improve that cross-departmental communication. But we then got some disadvantages. We talked about the fact that it's time consuming, that it's complex to involve that many people in creating a budget. We're going to talk about the fact that your managers could end up setting their budgets in such a way that it makes it really easy for them to hit the targets, particularly if there's some bonuses that are attached to hitting particular targets. That's called budgetary slack, where you set the target lower than it should really be. And then there's obviously the potential for conflict between departments. You can imagine the marketing department going, hey, we want more money for our marketing, and the production department saying, no, we need more money for production, and not everyone can have all of the money. So it could lead to some conflict. Now, how do we assess the suitability? That's the third part. Well, what we can do is we can pick up on the fact that there's potential cost control issues, if you remember from the reference material. So we could say, actually, this is something that could potentially help with that cost control problem that we've got, where the cost of sales is much higher than we'd actually budgeted for. So it could help with some of that cost control. But we need to consider some of the disadvantages, because it does end up being less efficient. And so we're going to conclude that perhaps a hybrid approach might be a preferable approach. So can you see what we've done there? We're spending longer on subtask A than we will with the others, because I'm illustrating how it goes, but we've looked at how the subtask is phrased, what are the different elements of it, we build a structure around those different elements. We then look at we take our syllabus knowledge into account, we look at the different information in the unseen material, and we build our answer into that structure. And that's what we've got here. And then you've basically got 11.5 minutes to write it. That's the idea that's going on. So you can keep a bit of a track of time to make sure you're not taking too long. So what we're going to do is we're now going to do the same thing for the other subtasks. We're going to move on to subtask B, probably move through a little bit more quickly than we have just done, but that's the general approach that we take to each of the subtasks. So let's move on now to subtask B.
So there we have it, 5 key videos to get you started with your exam preparation. I hope you found them useful, but the reality is that this is just the starting point, and you'll need to do a lot more preparation over the next few weeks to improve your chances of passing this tricky exam. And to that end, we have a number of options available. The video clips you've just seen are taken from our course content. And our courses are designed to help you ultimately pass the exam. We want to minimize your study time. And of course, we want to ensure that you're getting your value for your money. So if you want more of what you saw today, you want to check out our full pre-scene analysis pack. And that basically includes the full videos from which those clips were taken, from the pre-scene analysis videos through to the top 10 analysis, the strategic analysis, industry analysis. And in addition to that, we've also got 30 pre-scene questions that are designed to help you consolidate your knowledge and understanding of the pre-scene company. Pre-scene analysis is a crucial first step, but passing the exam requires developing your exam technique and lots of practice. So the best all-round comprehensive solution is the Astranti Premium course. On that, in addition to everything you get in the pre-scene analysis pack, you'll also get 5 mock exams. And those mock exams are written according to the pre-scene company. They're not generic and they don't have generic solutions. They're applied to the pre-scene and they're based on the top 10 issues. So you'll get questions in the mock exam that they'll have a good chance of coming up in the real exam. In addition to those mock exams, you can get mock marking and feedback. And this is where you'll submit a mock exam to your dedicated marker and they will mark that and give you a fully annotated script with feedback and annotations. And they also provide a 9-page document with feedback that you can apply in your next mock. In addition to that, we've got our exam technique video series. Exam technique is really important in this exam. And so our exam technique video series has 13 chapter study texts and accompanying videos taking you through every aspect of exam technique, right from understanding the exam through to interpreting the requirements, answer planning, writing technique, and time management. Really valuable course that will help you a lot developing those soft skills that you need to do well in this exam. Alongside that, we have 3 live masterclasses that run throughout the course, from the first one that's looking at the pre-scene through to later ones that look more at exam technique and theory revision to help you get ready. Included in the premium, you get access to tutor and mentor support, and you'll be able to access our discussion hub where you can post your questions and talk with other students and tutors about any questions and queries you may have. And our premium course comes with our double pass guarantee, and that's exclusive to premium course students. It's a double guarantee because if you don't pass, if you take this course and you don't pass the exam, we'll give it you again for free with no extra charge. And you also have a 14-day money-back guarantee. So if after 14 days on the course you're not happy, you can get a refund, no questions asked. So whatever your situation, we believe we have the solution for you at Astranti, and you can find out more at astranti.com/CIMA. Thanks for watching.